Good morning, it's Jonathan Barrett with the Morning Debrief. It's the 24th of June at 7:24. Nice eventful night last night, there's no doubt about it. Certainly kept us up for a few hours. The International Energy Agency came out in a surprise move, actually decided to increase or decided to release 60 million barrels of strategic petroleum reserves of 28 member countries. This is quite a startling move, and I think it's unwarranted for one thing, because the US economy in itself was slowing down. Jobless claims last night weren't that good. Bernanke himself turned around and said things were a little bit slow as well. So oil in itself would have naturally traded to the downside. I think adding an extra 2 million, and the reasons they've cited was Libyan concerns, in my mind suggests that was already placated. So I think there's a little bit more behind the move, and I think it's either one to look at OPEC. OPEC decided not to increase. Maybe it's a little bit of muscle flexing. Maybe there's more urgency to actually drive input prices lower than what we've seen, and I think that's probably one of the keys as well. You'd also notice the US dollar there slightly better bit as well. So I think there's a combination of things occurring out there, and I feel that the big move we saw there in oil, is a concerted drive by the Federal Reserve to lower the cost of primary inputs, and as a result of that. But it does coming with it is a double-edged sword. Now, as we've mentioned in quite a few of our discussions, you have two styles of inflation out there in the market. One in the east, which is more cost push, and one in the west, which is more cost push, and one in the east, which is more demand push. And what we're finding there is that the inflation in the west is easily placated by lowering primary inputs, but in the east it's a little bit harder because they're already suffering from inflationary. So the demand push inflation that we're seeing in the east, could only get worse because you're lowering your primary cost of inputs, and that also comes as a bit of a concern to me when offshore balance sheet borrowings in China continue to soar. So that's something we've got to keep an eye on. But anyway, let's look at the overall markets and what's actually occurred last night. I guess the key thing here is equity markets and what's happened with equity markets across the board, and you would be able to see that across the board they all came under pressure, and they're all sort of still a little bit weak. In fact, this is all part of a realignment phase that we're looking at in terms of asset prices. Here we go. The Dow was down 59 points, a bit of a comeback, quite a shaky night. The S&P was down 3. Just refresh that, I think. The Nasdaq was up 17, which was the Euro was down, top 50 down 64, FTSE was down 98, and the CAC was off 83. The DAX was down 128. Local futures markets closed relatively flat, up 1.4488. Let's see what happens there today. I think my expectations are probably that it will come under some form of pressure. Having a look at just some of the other, if we could look at some of the commodities here, and you can see that the index is all under slightly pressure here, particularly Rogers and the Bloomberg. You also look at Brent crude was down 4.99%, very aggressive. Gas oil was down 3.4, natty gas was down 2.2, West Texas was down 3.27, so quite aggressive. Corn down a fraction, wheat down a fraction as well, soybeans down as well. All these softs are at precarious areas. If it is designed to get primary import prices lower, then they're doing the right thing by allowing the US dollar to firm. The US dollar to firm, is certainly one way to get it done. Copper was down a fraction, a big move in gold and silver, particularly silver, which we actually preferred over gold. Gold was down 31 and silver was down $1.47, which got stopped into positions in both the gold and silver. So we are currently short, and actually short from some good levels there on the basis of those stops. So quite happy there. Okay, so let's have a look at some of the other stuff. I guess most importantly, just to keep an eye on this dollar index. It's something that obviously drives to home what the Fed is actually trying to achieve here. Before we had that big sell-off, we're once again up at this area here. Needs to get through 76.40. Dollar came down by default, and as you can see there, is at the top, but over the last couple of days it certainly wants to attempt that high end of the range. If it breaks 76.40, different ballgame. Okay, having a look at that Aussie, a bit of a bounce, 105.32, did get quite a low there. This is quite an important level for that Aussie. It's the second or third time it has bounced off these levels. So 105, I think, is the key. 104.80 it got down to, I think, a little bit lower than that. This could be the right thing to actually close out if you are short the Aussie, to reassess once you break through that 104, 104.80 level. This is big support for it. Momentum indicators are at their lows, but give the next day or two as to what you do there. But certainly this whole move here does look quite aggressive, okay, just so you're aware, but it can fall out the bottom. So we're right on support there. 104.80 will be the key for me on the little Aussie battler. Dollar yen, we've had a trade on for quite some time. It's pretty stagnant. You can see why we've got that trade on. I think technically you can see that it's a bit of a no-brainer. It's just mulling around here. Eventually we'll get some news on it. The big move, I think, obviously is with gold and crude, and we'll talk all about those. Gold 15.20. Look at this big move here. That is a daily move, and it takes out 15.50. Different ball game. You can see it down to that 14.62. As I mentioned, we got stopped into positions. We're following this trend. You can see it here on the hourly. And as a result of that, this trend here, it's broken through that level. So, chances are there that we find good support 15.50 for a while. Market oscillates around here, and then we decide what we want to do. Silver, big mover on the downside there, and quite an aggressive move. And there you have it there, straight off from those highs. Tried to move, aggressive to the top, failed, and down we come. Momentum indicators on the downside there. Just keep an eye on that daily. The interesting thing here, we've all perked that up as a breach and pullback here, ready for a move higher. 34.40 is a key here, and obviously down here. So we got a little bit ahead of ourselves, I think, because we're sort of feeling that gold over silver. Silver is a better bet, but with that move last night, we've got to try and review that. Okay, let's have a look at the crude market. Crude's the big mover. Why release 60 million barrels a day? Jobless claims still over 400,000. The Fed turning around, saying the economic will slow down, unemployment rates made high. It doesn't make sense unless you're trying to have a go at someone, and I think that's probably one of the things. Have a go at someone whilst lowering primary inputs, and that's what we're here. Right on support here at 90. For those that know, that was a target we had some time ago, been realised. So let's see the price actions to see if we climb back on board. Okay, just keep an eye on that Brent West Texas spread. 222 was a record. You could probably see that starting to come back in a bit, and the main reason for that is that half the stock, although a lot of it's coming out of the US, a lot of it's coming out of the Gulf Coast. So if that's the case, then you probably see this actually come in a bit. Okay, so that's it on those. The grains, just having a quick look at these. As you can see, still all under pressure. The favourable weather concerns that we have seen, not only in Europe but in the States, is causing that. But I would like you to note that we did get a bounce from there. Look at wheat as well. It's hard to see, although we've seen negative price action in these markets, we've had some bounces, and you can see the same for soya. So just be wary of those markets. They are right on daily support, and as they're on daily support there, probably expect, because we are in ranging days, ranging moments, that the range is certainly there. Okay, right, so that's all there. In terms of economic calendar, what have we got coming out tonight? Obviously, durables, GDP index, personal consumption. All these numbers have been primed by the Fed to suggest that we'll get weaker data. So if it is, we don't get as weak as what we expect a turnaround. But at the moment, we've got to suggest that those numbers will be weak, given the priming we've seen from the Fed. Just by way, someone mentioned the other day in one of the reports, can we just spend a little bit more time on what the SPY's doing? And obviously you had that big bounce there in the indices, right on lows. It'll be interesting today because 44.50 will be the support for it. a break of that, we'll realise a target that we do have, which is down at 4,200. Okay, that's about it from me. I think everyone knows the positions that we've got on. You're following the tweets, you know where we're at, and I think it's going to continue to be quite an interesting couple of days. Still a bit of a curveball from the data which we've seen from the IEA, but let's see what happens. That's it from me. Have a great day. We'll certainly talk to you tomorrow. Bye for now.